Hi, I'm Urvesh Vasani, CEO and co-founder of Bankpay, and along with my co-founder and CFO Devansh, we're building a zero-fee, loyalty-driven checkout for e-commerce that rewards customers with store credit for choosing to pay with their bank account instead of using cards. Because look, it's no secret that accepting payments via card networks is expensive and it carries a lot of risk. And this is why account-to-account transfers have been the promised solution to this for the past 4 years that open banking has been around. But open banking payments will not see mass adoption unless European startups address two major problems with their current approach. The first one being customers have no reason to pay with their bank account, especially when they can check out in one click using Apple Pay or use Klarna to defer their payments. Secondly, with open banking APIs being so cheap and easily available, you're essentially engaged in a race to the bottom because you're forced to compete on price if you're selling a commodity like payments. Which is why we realized very early on that instead of rivaling with competitions over 5, 10, 20p margins, we're just going to target a different budget that over 80% of brands set aside for acquiring and retaining customers, known as their performance marketing budget, to turn the checkout into a retention tool from it being a cost center. So how BankPay works is, customers earn store credit for choosing to pay with their bank account instead of using cards. This store credit is then automatically applied when the customer comes back to shop with the same brand again the next time. And by doing so, we've now created a multitude of win-win-win situations for all of the stakeholders involved by essentially rewarding customers with store credit. Brands are now incentivizing the use of a more efficient payment rails like account-to-account transfers, and we're able to more effectively compete with other payment methods on the checkout page. Plus, because of this incentive, brands are now seeing an increase in average basket values, increase in conversion rates, as well as loyalty, thereby boosting top-line revenues for them. BankPay comes in at the point of re-engaging customers with our mobile apps and our marketing campaigns to not only come back and redeem the store credit which they've earned, but also allow brands to target new customers with targeted placements through our assets. So by essentially flipping the business model over its payment processing business model over its head, we have simply eliminated payment fees. We're boosting loyalty, increasing conversion rates, increasing average basket values, allowing brands to access new customers. And because all of this is happening over banking rails, you have instant transactions, instant refunds, no chargebacks, no fraud, no false declines. So BankPay's business model is very straightforward. We don't charge transaction fees, but we instead charge an attribution fee of anywhere between 2 to 6%, and this comes out of the brand's existing performance marketing budgets, so it doesn't cost them anything extra. Moreover, by doing so, we're able to operate at average take rates which are 3 times higher than that of the competition without ever competing with them on price. So let's look at an example scenario, right? Currently, a brand is paying 2.9% plus 20p to accept payments, plus they're also setting aside 20% to acquire and retain customers through influencer marketing, loyalty marketing, affiliate marketing, and the rest. With BankPay, they've eliminated their payment processing costs entirely, and we then split that 20% into giving 16% over to the customer as store credit and keeping 4% as an attribution fee on returning purchases. Because this budget is only activated on returning purchases, it's a 100% zero risk proposition for the brands that are involved in this. We're looking at this as a global opportunity to incentivize bank transfers around the world, which is why this is a $320 billion market, and there is just so much that can be done here. Customers can sell their unused credits, brands can target lookalike customers, brands can also re-engage slipping or lapsed customers. We can also introduce insurance products, tiering customers to offer premium customers to luxury brands, and also allow in-app shopping much on the veins of Klarna. We've had some interesting early progress, got some very good feedback from some of the brands that we've been speaking to, and we've also partnered with the likes of Awin, who's going to be introducing us to 21,000 brands that they represent to onboard them as a merchant on our platform. Competitive landscape is very interesting here. Nobody across Europe is paying attention to the consumer adoption problem, whereas in the US we have companies like Catch, which is implementing the same model as us, and also Imprint, which is also bundling a loyalty program with account-to-account transfers. We have a brilliant team on board. Devansh, apart from being a co-founder, CFO, as well as my brother, he holds 2 professional qualifications, one of them being a chartered accountant as well as a certified internal auditor. He is ex-senior consultant at EY and currently assistant vice president at Citibank. This is my second company. I've spent the past 8 years in performance marketing, growing an agency to a team of 12, 100% bootstrapped, so this model fits perfectly with my experience. We also have a CTO with 21 years of experience in tech, along with a team of engineers who have experience building Japan's PayPay app, which is SoftBank owned, as well as India's biggest financial super app called Paytm. So thanks so much for listening to me, and I look forward to discussing this with all of you. Thanks. Bye.